Time now for Trading Nation. Taking a look at Starbucks in rally mode after former CEO Howard Schultz told CNBC's Jim Cramer, quote, the stock is cheap and undervalued. Stock still pacing for its worst week in over 2 years after the earlier week sell-off, but you can see it's higher by 1.5%. Gina Sanchez is with Chantigo Global. Larry McDonald publishes the Bear Traps report. Barry, what do you think? Is Howard Schultz right?
Well, remember one thing. When companies go through these restructurings and they're closing down stores, a lot of times, most times, investors have to realize they bleed out the truth one drop at a time, and it's very difficult for a CFO to gauge store closings. And most of all, you're talking about a company with a 24 forward PE, 24 times earnings forward PE, but true earnings growth over the next 2-3 quarters is going to be single digits. That's a bad combination in a situation where they're probably going to have to come clean with the restructuring over the next 2 to 3 quarters. I see 10 to 20% downside from here.
Wow. Okay, Gina, what do you think?
Well, I think there's definitely more if you peel back this onion, because it's more than just the store closures. Theoretically, store closures should actually be net positive over time. However, you also have the issue of rising labor costs. That's another piece of the story. And then you have a growth in China stumble that caused a Morgan Stanley downgrade. Those are two additional pieces of the puzzle here that are sort of leading or explaining some of this, single-digit growth that Larry's talking about. So I do think that it's going to be challenging going forward.
Okay, 2 negatives. Got it. Whether it's the technicals or the fundamentals. Thank you, ladies and gentlemen. Larry McDonald, Gina. For more market insights, head to our website, tradingnation.cnbc.com.
When markets are volatile, resist the urge to use too much leverage. Leverage is a double-edged sword, and when markets are calm, it's easy to forget the downside of leverage. When volatility picks up, losses can mount quickly. And if you're forced to close out positions, it will likely be at the worst time and price.